Good morning, traders. Welcome to Tuesday's Phoenix Blue Morning Update. I'm Tom Colley, and I'll be taking you through the news and the markets this morning. Right, let's start with the news. Well, we had this Fed announcement yesterday, which was the unscheduled meeting of the FOMC board. No matter where I search, I can't see any feedback or any information being released about what actually happened in that meeting. The reason for the meeting was listed as discussing the discount rates for the Federal Reserve banks. Also in the news yesterday was Janet Yellen, the Fed governor, meeting with President Obama. And depending where you read about that, that was a very rare occurrence or something that happens regularly. So, although that event was potentially significant, we don't yet know what that significance might be. As I said yesterday, some people were trying to read into it that the last time that event happened in November, that was pre a rate rise, possibly trying to suggest that we'll have a rate rise in the April Fed meeting. News today is limited. We've the CPI on the pound out at 9:30 this morning, and then sometime overnight, it's listed tentatively there, we'll have the Chinese trade balance, which will be of interest. Now we'll go over to Asia now and start with the Shanghai Composite. This is the composite of the Chinese stock exchanges. We can see we've been looking at this bullish channel here. We have a level here that we appear to be consolidating around at the moment. We had a slightly bearish day or session overnight, so not a lot to report over what we had yesterday there. We haven't had a look at this for a couple of days. This is the US dollar Chinese yuan exchange rate. And interestingly, I read a Bloomberg article this morning suggesting that their measure of expected price swings fell to its lowest level in 5 months, suggesting stability in this exchange rate and potentially a stabilizing of the Chinese economy. Over on the Nikkei, we had a bullish session. We'll go on to look at the yen in a moment, basically, but the yen was stopped in its rally, and this is potentially reflecting the expected pullback in the yen. Over on the dollar index, well, we're at a level here at about 93.75, 93.80, a significant level. Possibly what's most significant about this is that it correlates with levels on the euro, the Swissy, CAD, and several other currency pairs. That correlation always enhances the ability to trade, or the probability of that now stopping and reversing and returning to dollar strength, which, as you know, is our longer term bias. Over on the yen, well, here's yesterday. We had a doji at the bottom, or around the lows of last week. We have this morning. We've had some bullish movement on the yen, and we're looking for a level of around 110 when we'll be looking to take the yen short again. Trades that we had yesterday, well, we had a couple of trades on the British pound. We traded around this level first. Unfortunately, that was a loser, went straight through, hit our stops almost immediately. But we subsequently re-entered the market at this level here. We're very, very nearly stopped out again on some volatility there. But this morning, things seem to be moving in our favour in that respect. We're also in on another new trade on the New Zealand dollar at this level here around 6885. This triggered early this morning, and we're looking for, well, we bearish this market. We have been since we saw a drop in a 0.25% drop of New Zealand dollar interest rates last month. So we will be looking to take this market short to add in where possible, particularly when we break below this trend line stroke channel here. Okay, that that's really all there is to say about today. Just to reiterate about our Phoenix Blue Pure analysis, you'll have noticed we use clean charts, easy to understand. We are relying totally on price action and horizontal levels. We don't use any indicators, any lagging indicators whatsoever. We look to buy and sell with the banks and the institutions. We always trade with a fundamental bias. We use a commitment of traders and analysis from the futures market and independent market. We look to follow what are called the commercials in that market. They are institutions that facilitate their business through the markets, which is the true reason for those markets existing. So rather than following the speculators, we follow those commercial traders. The net result of the way that we trade is we determine really accurate levels so that we can trade with just 40 pips stop losses. This means we can be profitable with a smaller number of winners or more profitable with the same numbers of winners. Now, if you're a trader who's looking to improve their results, take their trading to the next level, please don't hesitate to talk to us. Simply drop us an email at info@phoenixblue.co.uk. We'll respond by email, we'll call you, whatever it is that you want us to do. Any information whatsoever about our trading systems, our education systems, please email us that address. If you have any specific questions about this video, I'm at tom@phoenixblue.co.uk. Okay, that's it for today. We look forward to speaking to you in the morning. Take care.